Hi there, very good morning. Welcome back to VT. Now you're watching Market Cafe with me, Ganesh Sarkar. Over the next 1 hour, we'll tell you all about the global and domestic cues that you need to watch out for, and also tell you about the stocks that you must keep on your radar today. But well, before that, let's get started with an eye on the globe and see how the US markets are faring this morning. And how the US markets ended overnight. And yes, it was a very negative day coming in for all the three major indexes. The Dow Jones Industrial Average that led the pullback that we saw overnight on Wall Street. It dropped more than 550 points, or about 1.2%. The S&P 500 and Nasdaq, they both fell about 0.9%. Now, this is extending, what has been a challenging month for the indexes on the Wall Street. Now, Nvidia was a key pressure point on Wall Street that slid about 2%. This is ahead of its highly anticipated third quarter earnings that are due Wednesday evening. In fact, the chip makers' results, they come at a time when investors are questioning the AI-led rally that we saw on Wall Street in the past couple of weeks. The Nasdaq, in fact, is now on track for a 7-month winning streak, while the S&P 500, that's down about 2.5% so far in November after 6 straight months of gains. So yes, negative moves coming in for the US market overnight, but overall, the Nasdaq seems to be on a winning track as far as the month of November is concerned. But in terms of what you must be looking out for, now investors are keeping a close eye on some of the key week's catalysts. First up, of course, like I mentioned, it's the Nvidia earnings that are due Wednesday, that is tomorrow, which will be a key read on the AI trade that we are witnessing on Wall Street. Other than that, Federal Reserve rate cuts, the October meeting minutes and the September non-farm payrolls report. These are the first major data releases that we are going to be watching out for after the US government shutdown ends. So let's see how that pans out for the market. There are rate cut expectations which have sort of cooled for now, with markets pricing in just nearly 40% of a cut. That's down from over 90% that was being anticipated a month ago. Other than that, consumer sector earnings are also on the card. Walmart, Home Depot and Target report this week, offering fresh insight into consumer sentiment. So yes, that's about the US markets. But let's shift focus and also talk about crude and see how the commodity market is shaping up this morning. Well, oil prices, they are quite steady today as the market weighs a growing global surplus against new US sanctions on Russia. WTI is trading below the $60 barrel mark, whereas Brent is near $64 a barrel. Other than that, a major supply overhang is expected next year, with the IEA forecasting a record surplus in 2026. This would be driven by returning OPEC plus output and rising production from Canada and non-OPEC nations. But there are geopolitical risks as well, from Sudan to tensions around Iran and Venezuela. These are preventing deeper slide in prices. If we talk about gold, the yellow metal, that is also in focus yet again. And it's flat after 3 days of losses that have been seen. It's trading around that $4,030 an ounce mark. Expectations of a US rate cut that have faded, with odds of December rate cut now near 40%, as I mentioned earlier. Now, data backlog from the prolonged US shutdown, that is also adding uncertainty as far as the yellow metal is concerned. An upcoming jobs report, that's something that is crucial to watch out for. Now, despite the recent softening, gold is still up about 54% this year, supported by heavy central bank buying, including China. So yes, that's about the commodity markets as well as Wall Street moves that we saw overnight. But let's get tracking some of the top global stories this morning. First up, the UN Security Council has adopted a US drafted resolution backing Donald Trump's Gaza plan, authorizing a transitional authority and an international stabilization force. Now, this move legitimizes the first phase agreed by Israel and Hamas, which is a ceasefire and hostage deal, and paves the way for reconstruction oversight. Hamas has rejected the resolution, vowing not to disarm, while Russia and China abstain. That allows them to the measure to pass. The Palestinian Authority that welcomed the vote. Next up, Trump has urged House Republicans to vote in favor of releasing the Epstein files, a sharp reversal after years of resistance from his inner circle. Now, the call follows emails released by the House Oversight Committee showing Epstein discussing Trump. Now, Trump insists that Republicans have nothing to hide as the House prepares for a bipartisan vote today. Moving on, Trump also said that the US will reclaim a major share of global chip manufacturing within a year, arguing that tariffs are not a CHIPS Act. They are driving production back to America. He criticized past policy for allowing the semiconductor industry to shift to Taiwan and claimed that chip makers are now returning because of his tariff strategy. Let's listen into his comments.
If you're going to be making chips, we don't make chips too much here anymore, but we are going to be in a period of a year. We're going to have a big portion of the chip market, but we have to train our people how to make chips because we didn't do it. We used to do it, and then foolishly we lost that business to Taiwan. Very, very foolishly, because if they had a president that thought like I did, they would not have let that happen. But it's all coming back. I think we're going to have within a few years, we're going, and not because of the CHIPS Act. The CHIPS Act was a disaster for this country. We gave away billions of dollars to other countries and other locations and companies, and all they did was rob our money. But because of tariffs, the chips are coming back. Chip makers are all coming back. And I think within a very short period of time, we're going to have maybe even the majority of the chip making in the world will be right in the United States, where it should have been all along.
All right, so those are Trump's latest comments on chip manufacturing in US. But let's move on and get you some more global updates. The Federal Reserve Governor Christopher Waller has signaled support for another rate cut at the December meeting, citing a weakening labor market and slowing hiring. His stance highlights a widening split within the Fed as some regional presidents warn that further easing could reignite inflation. Now, Waller said that he's not concerned about inflation reaccelerating and favors a quarter-point move. Moving on, Novo Nordisk has slashed direct-to-consumer prices for Wegovy and Ozempic to $349 from $499 earlier. This is for existing cash-paying patients. Now, the move follows new agreements with Trump's administration to expand access to GLP-1 drugs through price cuts, Medicare coverage for some patients, and discounted medicines via the upcoming Trump RX platform. Next up, now Alphabet shares have jumped over 3% after Berkshire Hathaway disclosed a new $4.3 billion stake, now its 10th largest holding. Now, the move signaled Berkshire's growing comfort with big tech bets, even as Buffett prepares to hand over the CEO role to Greg Abel. Now, Alphabet's strong AI momentum, rising cloud profitability, and comparatively cheaper valuation appear to have sealed the deal for Berkshire's next-gen investment team. Next up, India retains its spot as the largest source of international students in the US for the second consecutive year. A total of 363,019 Indian students were studying in the United States in 2024 to 25, which is an increase of nearly 10% on a year-on-year basis. On the other hand, Chinese students in US declined by 4% in the same period. Now, additionally, the overall number of new international students in the US has declined by 5% for the first time.
If the situation doesn't change and if countries like India and China stop sending their students to the US, a large number of US universities will look at bankruptcy. If you look at the private universities in the US, which are not state funded, most of them survive because of international students. And there's going to be a huge problem in case these international students do not come in. And apart from economic and financial reasons, look at the other benefits all these international students bring into the campus, the type of diversity in the ecosystem that comes up. Even, for example, look at the staffing. For example, all the research associates and all the work that happens inside the campus are all assisted by large part of these international students who take these additional roles to make sure that they can subsidize their course fees. I think some of these ecosystems, some of these equilibriums will start changing the way if this becomes a norm in terms of making sure that it's unfriendly for international students. I think it's going to be a big trouble.
All right, so that's the word coming from Team Lease's Shantanu Uruj. But let's move on and get you some more stories. Now, Myntra held its Glam Stream Fest at Mumbai's MMRDA grounds on November 16th. And with live performances, interactive brand experiences, and a massive creator turnout, Myntra is signaling a new chapter in experience-led retail. In an exclusive conversation with ET Now's Ankur Mishra, Chief Marketing Officer Sundar Balasubramaniam said that creators now drive close to 10% of Myntra's monthly revenue. Let's take a look.
I think the Glamstream Fest is for the content creators, right? Myntra has had a collaboration with content creators. Earlier they were called influencers, now they're called creators. Over many, many years. And I think, it precedes my time here. Probably over the last 8 to 10 years, people at Myntra have focused on influencers before it became what it is today. And we've been continuing to build. And I think we are at an amazing inflection point today where we have over 350,000 creators who post content about Myntra every month. And more importantly, they are driving close to 10% of our revenue every month. So for us, that's the starting point of our collaboration with creators. And the Glamstream Fest is actually just a celebration of that. We've been doing it now for 4 years under different names. We started it in 2022 called the Myntra Creator Fest. And we've been scaling it. This year is the biggest so far. I think we have over 3,000 creators right now enjoying a concert. And that's what we're celebrating, our association with creators.
I'll ask you to focus more on the 10% part where you have mentioned that much of the traffic is coming from there as well. How does it happen? How does it translate into the bottom line end of the day?
Absolutely. I think this is a very interesting journey that the creator ecosystem and Myntra has gone over through the years. Earlier, a lot of creators, influencers were being used to drive brand awareness, and it kind of stopped with that. And when it is that model and you're doing a pay-per-post model, beyond a point it becomes difficult to sustain it and keep paying for it. I think somewhere beautifully it evolved into an affiliate ecosystem model. When it moved away from just big, the million of followers type influencers and creators, to when a lot of short video content, social media came into the country, we've seen a democratization amongst the creator ecosystem. So today, anyone with, whether you have 1,000 followers or 10,000 followers, can put out content, have engaged with their communities, with their audiences, and now they're also able to drive commerce. So now we are at a model where I'm not paying per post, but I'm actually paying for an output. You put a post out with or something that's available on Myntra, people click on it and buy it, you earn commission of it. It works amazingly for the creator because they are incentivized to do more and more work. It works for us because for every buck spent, we are getting revenue out of it. So I think this is the win-win both from a commercial model perspective and the way the creator ecosystem in the country has democratized, that has kind of come to where we are with a 10% contribution. And we've also done this both off platform, which is social media platforms like Instagram, like YouTube, like Snapchat, as well as on our own platform. Myntra has a program called the Ultimate Glam Clan, where any person, you and me included, can sign up to be a creator. Whatever you shop on Myntra, post that as a review, an image or a video, we will showcase it to everybody who comes to that platform. And if someone buys, you earn commission of it. And that program today has 3.5 million people who have signed up for it in just the last 12 to 15 months.
Right. You're talking about the current scenario. I also want to understand how it actually started.
I think many, many years ago, and this predates me, right? As I said, the good people at Myntra identified that fashion and beauty are categories that work on trends. And trends keep changing over time. And the best purveyors of trend are influencers. They are people who are, because of their following in the country through social media vehicles, they could talk about trends happening globally real time to them and convey it to them. That access did not exist in the earlier television world, something that social media allowed. And because of that trend being a little bit of a pivot point that worked, I think people signed up on influencers long back, and full kudos to the teams earlier who did that. And we've been building it ever since. And there have been many models that we've tried. We've tried models where we had our own exclusive squads. We've now reached a model where it is much more almost a marketplace as we work with people. So that's changed over time. But I think at the heart of it is the fact that influencers can both drive aspiration for trends, and when they are micro and nano, they
It's all about the creator economy and Myntra. But with that, it's time now to slip into a very short break. We'll be right back with more on the other side. Hi there, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar, and it's time now to take a look at how the Asia Pacific markets have opened up, and let's see how the indexes are doing. And like tracking the Wall Street losses that we saw overnight, all of the indexes are trading in the red right now, tracking all of those losses. China's Shanghai down about 0.4% at the 3,956 level. Hong Kong's Hang Seng down more than 1% at the 26,000 odd level. Japan's Nikkei, that's in fact trading with most losses at this point, more than 1.5% lower right now at that 49,470 odd level. So yes, those are some of the key indexes. If we talk about South Korea's Kospi index, that's also trading lower. It's down about 1.5% right now at that 4,026 odd level. So yes, that's about some of the major indexes. Other than that, there's also Hong Kong's Hang Seng index, which is also trading nearly more than 1% lower right now at that 26,000 level. Now, if we talk about Nifty, now we did manage to close above that 26,000 mark yesterday at that 26,013 mark to be precise. And today, tracking the global losses, looks like we're in for a muted start. Downtick of about 46 points is what the Nifty implied open is suggesting. So yes, likely to maintain those 26,000 levels, but yes, a downtick is what we are expecting as of now. A muted start, a downtick of about 0.1%. But yes, how did the markets do yesterday? For that entire roundup, Snehi is here to take us through all of it.
Well, a very good day of trade for our markets. 26,000 is something that we've managed to hold on to, although very nominally 26,013 is where we've closed for the Nifty spot. Nifty Bank also managed to hit a new fresh all-time high at 59,000 and closed just nominally below that level. From the top Nifty 50 gainers, you had Eternal, Tata Consumer, Eicher Motors, Maruti Suzuki and Bajaj Auto. On the flip side, it was names like Tata Motors PV, continued pressure on that stock, 5% lower on that front. Ultratech Cement, Geo Financial, HDFC Bank, these are some of your top Nifty losers. Sectorally, before we come to the sectoral move, the advanced decline you're quite even, Steven, but you are the broader markets that nominally outperform the benchmark. So nothing to worry about on that front. But now talking about the sectoral winners and losers, only winners because all sectors managed to end in the green, with Nifty Metal absolutely on the flat line, but no sectors ending in the red. You had PSU Bank, that was the top sectoral gainer, up 1%, with names like IOB, Maharashtra Bank, PSB, Indian Bank all doing very well for themselves. This was followed by Nifty Auto, Bank, Energy, Realty, Media, FMCG, IT, Pharma and Metals. That was the least gainer in today's. If you talk about some individual stock performers, Narayana Hrudayalaya up 15%, very strong set of numbers from that company. Maharashtra Scooters was up 7.5%. MRPL was a high flyer in trade towards the end, a 6.5% uptick over there. HUDCO, India Cement, Siemens, transformers and rectifiers, that stock continues to be in the green. PB Fintech also very good move coming in. On the flip side, Tata Motors, Agility, Valor Estates, Bajaj Holding, Emphasis, Astral, Rainbow Children's, all of these stocks were under some pressure. So that is how we've wrapped up for the day. But yes, 26,000 is something that we've scaled and managed to hold on to for the Nifty. Now come the Nifty expiry, we'll see what happens to the market. But yes, 26,000 is something that we've held on to.
All right, so all eyes on the Nifty expiry, and need to see if we hold on to that 26,000 level in today's trade as well. But which are the stocks that are going to be in focus? Ashesha is here for that list. Ashesha, over to you. Good morning.
Good morning. First up, let's talk about two block deals that are likely to happen today. And first is Paytm, where Elevation Capital is looking to sell about 2% of its stake from the company. This will be done at about 1,281 rupees per share, implying nearly 4% discount as compared to yesterday's closing price. And the total deal transaction size is likely to stand at about 1640 crore. So on the back of this block deal, keep an eye out on Paytm. Another counter which will again be in focus on the back of block deal is IT counter,
near Emphasis, where Blackstone is looking to sell up to 9.5% stake. This will be done at 2,570 rupees per share, implying 4.4% discount as compared to yesterday's closing, and the total transaction is expected to stand anywhere between 4,600 to 4,700 crores. JSW Infra, meanwhile, on the back of an acquisition that the company has announced, they said that they will be acquiring 51% stake in Oman Port project. This will be done via company subsidiary, which will enter into a joint venture, and they will develop 27 million ton per annum port, and JSW is also targeting about 400 MTPA cargo capacity by 2030. As far as the total project cost is concerned, this is likely to come in at about 3,700 odd crores. JSW Energy, meanwhile, on the back of a resignation where the company has informed the exchanges that Director of Finance and KMP Pritesh Vinay has resigned to pursue personal opportunities. So this is a resignation that has come in, a big one. Keep an eye out on JSW Energy as well. And PTC Industries, on the back of their expansion plans, will be in focus. The company announced a major expansion in Mehsana's Gujarat casting facility. This will add about 50,000 square feet capacity, and this is to scale industrial exports and also to meet domestic demand. So, big expansion plan coming in. PTC Industries, positive news flow for them.
Thank you, Ashisha, for that. But lots of other stocks as well, which are going to be in the spotlight today. First up, let's talk about HCL Tech, a new launch coming from HCL. Now, it has launched the Physical AI Innovation Lab in collaboration with its global peer, NVIDIA. So, yes, all eyes on what this lab does and how the market is going to react to this development. So, all eyes on HCL Tech. Other than that, from the auto space, we have Tata Motors CV, which is going to be in focus today. This is because the European Union has cleared the Iveco and Tata Motors deal. So yes, all eyes on that and the contours of the deal going forward. So that's about the auto space. But apart from that, we also have developments coming in the pharma space. AstraZeneca, well, it's going to be in focus. The deal, it has signed a deal with Sun Pharma, another peer. This is for sodium zirconium cyclosilicate 5G for India. Now, AstraZeneca is going to market Lokelma, whereas Sun Pharma, that will market Gemiliant. So that's the deal that these two companies have signed. In fact, AstraZeneca is going to retain the IP and market authorization. That's the latest we are picking up, and we'll watch out for how the market reacts to this development. Other than that, yet another counter from the auto space. Now, TVS Motor is going to be in focus because it has launched its new TVS Apache RTR 180 in Kenya yesterday, and this is an expanded premium motorcycle range in Africa. So yes, we'll watch out for how the African market reacts to it in terms of acceptance for this motorcycle and how the stock reacts back home here. Other than that, we have DCX India, which is going to be in focus because it has backed a purchase. It has backed orders worth 16.45 crore rupees. For advance back deal. So yes, two orders. In fact, one is an ARM order. It's an order for Ambrunel advance back deals. This is worth 6.4 crore rupees. So yes, a total order worth of 16.45 crore rupees, and the bags deal order for 6.4 crore rupees. So yes, that's the latest we are picking up. Lots of stocks to watch out for today, and key to watch if we are able to hold on to that 26,000 on the Nifty. So yes, with that, time now to slip into a very short break. We'll be right back with more on the other side. Hi there, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar, and it's time now to get you an ET Now exclusive. Well, the government is likely focusing on high-speed rail network expansion. That's according to sources. And the Railway Ministry is prioritizing new corridors designed for trains running at 3 kilometers per hour and above. Sameer Dikshit is here to take us through all the details.
The Railway Ministry is having a big focus on high-speed rail corridor, and the same is likely to be reflected in the upcoming union budget. We are picking up from our sources that there will be a special mention of a high-speed rail network in the upcoming budget. This simply means, this corridor means that the train can run at an operational speed of more than 250 kmph. As of now, 6 such corridors have been identified. For example, Delhi Banaras, Banaras Kolkata, Delhi Ahmedabad, Delhi Amritsar. So these are a couple of routes or the corridor which have already been identified. Many steps have already been taken. For example, the preparation of DPR, detailed project report, has been done. LIDAR survey, an important survey that is being done to finalize the route that has already been done. So with this sort of a step, government has shown that they are very much committed for executing the high-speed rail network. In addition to this, one Vande Bharat train that is capable to run at 250 kmph plus speed is already under manufacturing progress. So with this sort of a step, government aims that they will have a very extensive network of a high-speed rail network in the country. In addition to this, we have seen that recently Prime Minister Modi visited one of the station, a bullet train station in Surat, Gujarat, and has seen himself the progress of bullet train, India's first bullet train project, which is Mumbai Ahmedabad bullet train project. And government is committed that the first section of bullet train, 50 kilometers, Surat to Bilimora, can be operationalized by year 2027.
All right, so big push for railway sector likely, but let's move on and get you some more updates. Now, the Delaware High Court in the US has ruled that most of the $533 million missing from Byju's Alpha was round-tipped to founder Baiju Ravindran and his affiliates. My colleague Anurag Joshi is here with more details on this one.
A US court has said that a vast majority of Baiju's Alpha funds were round-tripped. The Delaware Bankruptcy Court said in a ruling that Alpha's $533 million of money was round-tripped to Baiju Ravindran and his affiliates. This $533 million is part of the $1.2 billion which Baiju's Alpha, a unit of Baiju, had raised in 2021, and this was through a 5-year Term B loan from US investors. Alpha's funds were not used for legitimate commercial purposes, the ruling said, and Baiju's Alpha filed suit in the Delaware court earlier in 2025 against one OCI Limited, alleging that the $533 million were in fact transferred to OCI and its bank and its principal Rupin Banker. The creditors had moved to the Delaware Bankruptcy Court in March 2023 and had successfully taken control of Baiju Alpha's assets and also had appointed a chief executive for Baiju's Alpha. Baiju's Alpha has reached a settlement with OCI, and as part of the settlement, the OCI CEO has submitted that Baiju's intention was to move the vast majority of the $533 million to a corporate vehicle in Singapore, which is controlled by Baiju Ravindran. The money raised by Baiju Alpha, Baiju Alpha had earlier had defaulted on the interest payment on this in 2023 itself, and this had become the source of a legal tussle between the creditors and Baiju's. Baiju Ravindran, in his reply to the court ruling, said that he's denying all the allegations made in the court filing.
For that latest updates. So now shifting focus from the edtech world to some financial space. Now Q2 was a healthy quarter for financials. Banking giants like HDFC Bank, ICICI Bank, SBI, they saw margins stabilizing, whereas the asset quality, that also improved on a sequential basis. Mithali is here with an entire roundup.
Starting with the banking space, if we see the margins saw a mixed bag this quarter. HDFC Bank reported a margin of 3.27% with strong asset quality, even as the lender continues to digest its merger. For ICICI Bank, it maintained a healthy position with margins seen around at 4.3% and steady asset quality. Kotak Mahindra Bank posted margins around 4.54%, outperforming the banking sector with notable improvement in the asset quality. Axis Bank's margin came in at 3.73% with asset quality showing a slight improvement, while for IndusInd Bank, it saw margins at 3.32%, but asset quality worsened this quarter for the bank. State Bank of India reported margins around 2.93% with asset quality removing steadily. Now let's have a look what the management commentary suggests that the next few quarters are going to be crucial. For HDFC Bank, it expects a gradual margin recovery over the next 2 to 4 quarters, while for ICICI Bank, it says margins are likely to stay range bound in the coming quarters. For Kotak Mahindra Bank, it guided that NIMs and credit costs should improve with a sharp focus on the retail unsecured lending. Axis Bank believes its margin will bottom out by Q3 FY26 and is guiding for loan growth 300 basis points higher. For SBI, it expects a significant pickup in the corporate credit backed by a strong pipeline, while if we see for IndusInd Bank, it however continues to reel under pressure with key operational metrics seen under pressure. Moving to the NBFC space, we have Shriram Finance delivering strong AUM growth and stable asset quality, while for Jio Financial Services, it reported a sharp growth in AUM supported by a fully secured book. Now coming to Bajaj Finance, it posted 24% of growth, but asset quality deteriorated largely due to the MSME related stress. Here's what the companies are guiding for the months ahead. Shriram Finance expects its AUM to grow an additional 2% in the second half, with NIMs likely to improve, while for Jio Financial, it continues to scale up its business operations supported by strong revenue growth. Now, if you look at Bajaj Finance, it has actually pulled back its growth guidance, though asset quality is expected to improve going ahead. Overall, while credit growth remains stable, we have a concern related to the asset quality pockets and the margin pressures to see ahead in the coming quarters.
All right, so that's all about the financial space, but let's move on and talk about consumption as well. Now, consumption majors, they posted a mixed Q2 results. HUL saw flat volumes, ITC volumes rose 6%, and Tata Consumer smashed all estimates with 14% growth. Margins stayed under pressure for most of them except ITC. Sneh is here to give us a picture of how the quarter was for the gone by space.
Well, yes, if you take a look at the second quarter for consumption names, especially on the staples front, a very good quarter coming in, positive surprise coming in, because not only we've seen volume growth for most of the companies, except one or two we've not volume degrowth anywhere, but what is surprising is three companies, and we'll take you through which ones exactly have reported a margin expansion. It is something that is that's something we've not seen in a lot of quarters in the past. So let me take you through all these staple companies one after the other. HUL first, good set of numbers coming in, flattish volume growth, but there was a contraction on the margin front, but still the margins did better than our estimates. For Nestle, better than expected quarter, 10.5% revenue growth. They don't provide volumes, but the margin was a slight miss on our estimates. Britannia, another good set of quarter gone by. They don't provide volume growth, but the revenue growth was up about 4%, and expansion is something that we've seen for Britannia's margins, and a sharp one at that, 19.7% compared to 16.8%, so a beat on Britannia's margins. Very good numbers from Tata Consumer. In my opinion, the standout of the quarter, the best performing in terms of volumes, a 14% volume hike despite the temporary GST rejig that has affected all the companies. Tata Consumer was an outperformer with a 14% volume high, but a contraction on the margin, still a beat versus our estimates. Godrej Consumer, ITC, Dabur, Marico, inline set of numbers coming in. You have seen expansion from ITC on the margins front. For Dabur, the 5.4% revenue growth stood up, 2% volume growth looked healthy. For Marico, 7% volume growth looked extremely healthy. So that is also something to watch out for, and we've seen expansion on the margins front for Dabur as well as ITC. Let me take you through some key commentary coming in from some of these staple players. You have HUL that has said that the second half is going to be better because the GST impact is now behind them, so that looks good. For Nestle, they've added a new Maggi noodles production plant in Ahmedabad, so that is going to look very good. Sanand, to be particular. Britannia has said that they're aiming at healthy volume-led growth. Tata Consumer, they've guided mid to high single-digit top-line growth. Godrej Consumer, EBITDA margins are likely to get back to the normative band, and they've targeted 7 to 8% domestic volume growth in FY26. For ITC, they say that rural and urban consumption both continue to do well. Dabur is expecting healthy margins and volume pickup going ahead. And lastly, Marico says that they see 25% revenue growth in FY26, and India volumes in the second half are going to be much better than first half. Now, this is very positive given that they've already clocked in 7% in the quarter gone by on the volume front. So yes, all eyes are going to be on what the festive-led recovery is when it comes to the second half of the year. Also, GST will be settling down, so that impact will also be keen to watch out for. But well, yes, overall, very good quarter coming in from staples and FMCG names and consumption overall for the second quarter.
All right, so that's about some key earnings from key sectors that we have been watching out for. But on that note, we'll take a very short break. We'll be right back with more on the other side. Hi there, welcome back to VT. Now you're watching Market Cafe with me, Kanishka Sarkar, and it's time now to take a look at what global experts are making of India. Now, Citi has come out with its equity strategy for India after the Q2 earnings season. The brokerage says it is overweight on financials, telecom, healthcare and defense and prefers SBI as its top pick. Ashesha is here to take us through all the details of this report. Ashesha, over to you.
Well, yes, Citi India believes that second quarter earnings season was ahead of what the street was working with. Now, as far as EBITDA is concerned, headline EBITDA growth at about 12% on a year-on-year basis was in line with expectations, but PAT growth of 12% YOY was a beat as compared to what Citi was working with. They say EBITDA beats were prominently in financials, healthcare and staples. EBITDA misses were in the sectors of utilities, industries and energy. Now, as far as other factors which continue to remain at play are concerned, they say consumption is likely to get a boost and that is likely to aid earnings going forward, and earnings revision trajectory has also started to improve, so that is another positive. Now, as far as Nifty 50 target is concerned, they have given a September 2026 target of 27,600 on the Nifty. They continue to remain overweight on financials, telecom, healthcare and defense. Underweight sectors include IT and staples, and they've added SBI to their top pick, and they say that it is likely to outperform systems growth. Net interest margins are expected to hold above the 3% mark for SBI. Credit costs are likely to remain contained and perhaps value unlocking on account of listing of its subsidiaries. So SBI is what they've added to their top picks list. As far as valuations are concerned, they say that valuations remain constructive on relative basis, although on absolute basis, India still continues to look expensive. So that's Citi report. They've given a target of 27,600 for September 2026 and a whole host of sectors that they are overweight on.
So that's about the Citi report and India strategy. But Ashesha, stay on with us. We also have our eyes on two major block deals that are likely today, Paytm and Emphasis. Tell us more details over there.
Yes, first up, let's talk about Paytm, where Elevation Capital is looking to sell up to 2% stake in the company. The total deal size is expected to stand at about 1640 crores. As compared to yesterday's closing price, the floor price has been fixed at a 4% discount and the floor price is at 1281 rupees per share. So Elevation Capital is looking to sell in Paytm. So that's the first counter. Second, we have Emphasis, where Blackstone is looking to sell up to 9.5% stake. The total transaction size at about 4,600 to 4,700 crores, and this is at a 4.4% discount as compared to yesterday's closing price, and the floor price is at 2570 rupees per share. So both these stocks, Emphasis and Paytm, in focus on the back of these block deals.
Emphasis and Paytm, they are going to be in focus on the back of these block deals that are likely. But let's shift focus to the infra space. Now, JSW Infra has signed a definitive agreement to acquire 51% stake in South Minerals Port Company, in which an SPV in Oman. Now, the deal has been executed via its step-down subsidiary, JSW Overseas FZE. Mithali is here to take us through all the details of this agreement. Mithali, over to you.
Yeah, rightly said. So JSW Infra has expanded its global footprint via this major overseas expansion, and the company through its subsidiary JSW Overseas FEZ has signed a share purchase agreement for a Oman port project. Under this deal, JSW Infra is going to acquire 51% of its majority stake in a dedicated port SPV in Oman. The total project cost stands at around $419 million, that converts to 3,700 crore rupees, and the port SPV is yet to commence operations and will be responsible for developing, maintaining and operating of around 27 million tons per annum capacity port. Now, the construction is expected to take 36 months with commercial operations targeted for the first half of calendar year 2029. For JSW Infra, this marks a strategic shift in the international markets when the management has otherwise been focusing on the domestic growth in the recent quarterly interactions. In terms of performance and outlook, the management is guiding for 8 to 10% volume growth, and Oman port acquisition is expected to strengthen the JSW's long-term capacity pipeline and enhance its presence in the global markets as well.
Thank you, Mitali, for that update. But let's move on and get you some more updates then. Now, the Securities Appellate Tribunal will hear Jane Street matter today. Now, this is months after SEBI's interim order accused the firm of manipulating Nifty and Bank Nifty on key expiry days. Anurag Joshi is back with us to tell us what to expect from this hearing.
The Securities Appellate Tribunal will hear equity investor Jane Street's appeal against SEBI's July interim order today. On July 3rd, SEBI had passed an interim order which accused Jane Street of market manipulation in India equity derivatives. Following that, Jane Street had appealed the SEBI order with SAT, and in early September, SAT had ordered SEBI to reply within 3 weeks on the Jane Street matter. SEBI said in the SAT hearing that the probe and final order on Jane Street could be wider, and Jane Street had requested to release all documents that are relevant to its case, and the order SEBI had passed on the alleged equity market manipulation. SEBI had told the tribunal that it will not share the documents that the regulator hadn't relied on for its interim order. SEBI sources in July had said that the interim order had looked at 18 key days of Bank Nifty index manipulation, and the period probe for the SEBI order was on the expiry date from Jan 2023 to March 2025. And in fact, 3 days of Nifty index manipulation were looked on the expiry day in May 2025. SEBI sources said that about 90% of the retail trade in index option on the expiry day are losing money. And according to a SEBI study, Indian retail investors have lost about $12 billion trading in equity derivatives in FY 2025.
All right, so all eyes on what happens in the Jane Street matter. We'll be watching out for that, and we'll keep bringing you latest updates. But moving on, in the very latest episode of ET Now Masterclass, we have Vallabh Bhansali with us, who explains how the Adani Group has excelled in the infra space and is leading from the front. Let's listen into his views on infra development.
Well, Infosys brought the power of governance, and it became a model. Reliance brought a power of capital markets, execution of a different class, and they taught. There was a time anybody wanting to build a refinery, a big project, they were taking people. There was only one place: go and take people from Reliance. Today, there are many companies of that kind. So also in building infrastructure, Adani has shown that we can do it. Before that, infrastructure is not only execution capability in terms of pouring cement and molding steel, but it's also in terms of managing the environment. That there are so many local situations to deal with.
Stakeholders.
So many stakeholders, so many governments in this country of different hues. How to manage all of them? So there are too many moving parts, and there are softer aspects to building infrastructure in India, which are not easy for everybody to manage. So you have to develop that capability. But one person shows the way, 20 follow. Just as a lot of people followed Infosys, a lot of people followed Reliance in terms of setting up, SR set up a big refinery. Our friends from Indonesia, they set up a PTA plant.
Yeah.
So people will follow. So Adanis have definitely taken a lead in setting up world-class projects and executing them on time and creating cash flows and then encashing it. So, they were able to place their equity to very smart investors. So I think different businessmen have played different roles at different points of time.
All right, so that was the word from the wise, the latest on ET Now Masterclass. But before we wrap this edition of the show, let's take a quick look at how the markets are holding up as far as the Asia Pacific front is concerned. Well, it's a very heavy selling day coming in for the Asia Pacific markets, tracking the losses from Wall Street. First up, let's put the spotlight on Hong Kong's Hang Seng Index. That's trading nearly 1% lower, down more than 230 points, 240 points rather, and trading at the 26,150 odd level. So yes, that's about Hong Kong's Hang Seng Index. Very heavy selling over there. Other than that, Japan's Nikkei, that's also continuing to trade in the red. It's down nearly 2% at that 49,350 odd level. Nearly 1,000 points of downtick coming in there, 970 to be precise. So let's watch out for whether or not we are able to recover from these levels as far as the Japanese markets are concerned. Other than that, China's Shanghai Index, that's also witnessing selling, not as much as the other two indices, however, just 0.3% downtick over there, down about 14 points at the 3,957 level. But do remember that the street is, witnessing and assessing the rising friction between Japan and China. This is after Beijing has warned its citizens about travel and study plans in Japan. So yes, both of these markets are tracking these developments, and both witnessing a downtick over there. Other than that, Nifty, yes, of course, we did manage to end above the 26,000 level, but it remains to be seen whether or not we're able to hold on to that. For now, the Nifty implied open is suggesting a start in the red, a downtick of about 67 points. So yes, but with that, we're completely timed out on this edition of Market Cafe. I'll take your leave, but don't go anywhere. The market will take all the action forward.